Hi, I'm Jim Hoffman with Hunt Real Estate. I'm here to talk to you about how important the low interest rates really are. I've got two scenarios that really kind of point out how the importance and the purchasability of low interest rates. Scenario number one happened about 4 months ago. Chris and I were recommended to help a young couple find a home. And we looked for about 3.5 months and finally settled on a $140,000 house in Amherst. It was a very nice home. And when we got done with the entire transaction, I said, it's unbelievable the deal that you have. You have no idea how good you really have it. And I went on to say, I'm going to pull up my calculator and show you what I mean. So I took $140,000 at 3.5% for 30 years. Payment was $628 a month. So I told them, I said, I bought my first home 21 years ago. And when I did, we assumed an 11.5% interest rate because the rates were 14%. That was a great deal at the time. So I took $140,000 at 14% for 30 years. The payment, $1,659 a month. That's a difference of $1,031 a month. So it took an extra $12,000 to control an asset 21 years ago compared to today. That's incredible. Scenario number two. About 3 weeks ago, a gentleman was recommended to Chris and I. He was looking for a $200,000 house in Amherst, Clarence area. And we got done talking for about an hour, and he said, Jim, I like what I hear. Obviously, I was recommended to you, and we're going to do business with you. However, I want to save up more money for my down payment. And I said, well, that's smart. Then the more you put down, the less your monthly payment's going to be. And I said, but what if the interest rates go up? And he hesitated a second. He said, what about, I mean, the rates are so low, how much does that really impact me? And I chuckled, and I said, huge. So I took out my calculator. I did $200,000 at 3.5% for 30 years. The payment was $898 a month. He said, if the rates go up just 1%, 1 point to 4.5%, which is the best rate in 50 years, I did $200,000 at 4.5% for 30 years. Payment, $1,013 a month. Not a big deal. It's about $115 a month, which isn't a ton of money. However, if you take that $115 a month and divide that into a mortgage payment, which right now, every $1,000 you finance runs you $4.49 a thousand. So if you do the math, you lose $25,600 in purchasing power. So to recap, if your income qualifies you for a $200,000 mortgage at 3.5% for 30 years, and the rate goes to 4.5% for 30 years, you now only qualify for $174,400. 25 grand, that's a new kitchen. That's a new kitchen and a new bath. So I said to him, I said, it's smart to save money, but if you save $10,000 over the next 6 or 8 months or so, and the rates go up 1%, which we don't know if they're going to or not, but if they do, you lose $25,000. He got that. He got that. We're looking for a house now. So you're getting ready to spend an awful lot of money. Please do your homework and find the right team that's going to work for you. My name is Jim Hoffman, and I am your Realtor for Life. Thank you for listening.